The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Be here, just a little housekeeping here. I'm going to be away next week. Well, I'll be around, but my grandkids coming to visit, and my wife and I decided that we will take a break. So I'm going to be mostly out. I'll be doing my opening call every day, but probably with the show, what I'm going to do is try to have these archived in such a way that we can do them as a part 1 and a part 2 and a part 3. I'm going to go through the bigger picture that I'm looking at this particular point. So this will be part 1, and it's the Tiger Technicians Hour. I'm here Monday through Friday, 11 o'clock till noon. And as we speak, this is Thursday, August the 15th, and the Dow is down 213 at 15,123. And the S&P is down 23 at 1661. Comp index is down 59 3609. Gold is down 7. I think I have an interesting perspective on gold. We'll go through it over the probably. I'm doing Larry's show next, so probably that's the one where I'll spend a little more time on the commodities. In fact, corn I spoke about yesterday, said there's a real good chance that it's making a nice turn here to the upside, and it has moved quite nicely to the upside, and I'll discuss that as well. So we've got gold down 7, silver up 0.05. You've got platinum up 2 at 1507. Copper is down 3 at 3.3. Just it did very well, and now it's kind of stuck. I got to watch this really closely. We do have a copper position in my opening call, still doing nicely on a percentage basis, but I'll be tightening that up very soon. So we're going on. We're looking at crude oil at 107.33. We got bonds down over a point. I'm going to talk about bonds in this hour and again in the next hour. So at 131.5. It's getting real close to important support. Looking out, I think yields are going to go higher, but there could be a counter-trend bounce, and we'll try to tie that together with the VIX, the dollar, and other things. But we'll go on, and we're looking at the dollar right now down just fractionally at 81.75. Now let's go one step at a time. One of the reasons why we went to why we shorted the Dow right there at the open of 15,524 on the 19th of July. In fact, I have it in the other one. I'll just put it in here just so that I can keep referencing for myself. Sold. Okay. So was because in the Chapman wave methodology, although the technicals at that point were still good, my anticipation was based on another moving average that was very important that said there's very limited upside, and we're going one step at a time. And in looking at these different steps, my impression was that if we went short, and we went short not the 200% but the 100%, because later on we could get the 200%ers or even 300%ers, the most important thing was to start the position based on the Chapman wave methodology. And what happened was it pulled back, went to an E, went to an F. Now, let me just quickly do this. I'll do this again in the next hour. Let me show you what I'm talking about. And for those of you who are new to my work, basically I look at a chart. And the chart is just, doesn't have to be candlesticks. I use candlesticks for other reasons. But what we're looking at here is just a plain chart. And that chart is going up and up and up and up. And, you know, it could, for some of you, it can tell you a lot. For a majority of people, you just look at it and you say, huh? But if you do this, and you put, I originally thought of numbers, but it was at a period in the 1980s, early 80s, where Robert Prechter was doing a lot with being interviewed every hour at CNBC about Elliott wave, etc. And I thought I got to distinguish myself because I don't quite understand it. I studied it, but I really never quite got that Elliott wave, and I have nothing to do with the Elliott wave. It turns out later on, as I've had people who've done Elliott wave do the Chapman wave methodology in my Master Trader series, they turn around and say, wow, that fits, that even makes the Elliott wave clearer for me. Those are quotes. But I'm still in the Elliott wave camp that says, those flats are really what get people when it goes sideways or it goes up in a sawtooth wave. The count is really, or the fifth wave fails. Well, in my work, it's a little different. Look, you go 1, 2, 3, 4 bars to the upside, peaks to the upside, pulls back. In this case, it goes 1, 2, 3, 4, 5, 6 to the upside, pulls back, and then it goes 1, 2, 3, 4, 5, 6, 7 to the upside. What the heck does that mean? What it means is if you use a Chapman wave methodology, you're going A, B, C, D, very clear, A, B, C, D, E, F, very clear, A, B, C, D, and then it continues up to E, F, and then within 3 bars you get a smooth peak G top. What is this? This is the SOX index from way back. This is 1999 to 2000. Well, now look at this with the arrows, and that's the clarity we tried to get using the Chapman wave methodology. Now we'll go on. Get rid of this. Let me just go back there to the beginning so it's all set. Okay. So we've got the same thing. Most identifiable low bar, 14,551, back on June the 24th. Goes all the way to a peak F. You remember that 6 highest peak, peak F? Confirms a sell signal the next day at 15,658 on the 2nd of August, and that's the day that it turns out we also went short the S&P. Why? Peak F top was confirmed. And that's the methodology that we use. You see, at this particular point here, right there at peak E, look at the MACD and stochastics. Very powerful. Look at that peak F. You know, this is the equivalent of using a particular technique, but with different indicators. As many of you here know that so many of our, just trying to get this cleared up, so many of our hosts here at TFNN use volume, and they say light volume, and price comes down because it can't be sustained. It's like having less air in the balloon as it goes up, and the balloon has made a peak and the air dissipates, and if you don't get enough air to push it even higher in the next move, when the air declines, the velocity or the warmth or whatever it is in the air that keeps the balloon up, if it declines, the next level could see the balloon drop precipitously. That's really the thinking here, gravity. So we've got a peak F in the weekly chart of the S&P. I'm sorry, the daily chart, peak F top, daily and weekly. Then you go to the weekly chart, because I love to do these in order. I'm not going to do any of the 120-minute charts right now. But there was a channel. It's another technique that I use in the Chapman wave methodology, the CD introduced in Chapman wave methodology. So I'm going to just do this real quickly because we've got callers on the line that are very pertinent to exactly what we want to look at. Let me show you that inside track has been resistance. That's that dashed line and the gray line there. Went to a peak F/A. I'm almost sure that it's going to be a peak F top in the weekly chart. What does it say? You could pull back in the channel. Take your time, move back to the 1620, 1596 area of the S&P. That's the way it looks. But I go one step at a time. We haven't even got a sell signal in the weekly chart yet. And the volatility index, the VIX, is only in the 14s. I mean, something's wrong with this picture. So I suspect that the volatility index now is going to be a lagging indicator, which makes us quite bearish. And it says, until I get a sell signal in the weekly by tomorrow afternoon, if the S&P closes underneath, actually I'd like it to close under where it is now at 1664. It really needs to close underneath the 9-period moving average, which is at 1669. That'll be the first indication. And it really is only an indication. I'm not even sure I'm going to give it a sell signal, even though we're short and etc., etc. Just not going to do it until I get that confirmation based on the stochastic at 92% is still strong. It means that at any point, the strongest sectors that have been going to peaks that I've identified over the last couple of days, even the Qs going to their peaks at this particular point, if there's any rally that's left over because of the strength of the weekly chart, those are the guys that are going to move higher. And there are enough of them that they can do that. So, monthly chart, I'm looking at this and saying, okay, monthly chart, you've got a lot of information to tell me. 1709.67 on the S&P was a high, and it went into the inside track, same sort of thing as the weekly, but there's a much longer one, goes all the way back to 2008. That inside track says, right there, I didn't want to change colors too much, but now that I'm showing it to you live, I can do that so you can see exactly how it works. Bam! See that red line? That's the inside track. See this green line? When we break out, and we will at some point later this year, break out above it, that's going to be very positive. We've got... I'm sorry, Rich, you were waiting, and I didn't see it until right this very moment. You want to look at the Canadian dollar. If you want to just call back, I will get to the Canadian dollar. Probably I'll be doing the currencies in Larry's show. So let me just put that on hold for a moment. I want to go to Mike in Long Island. Very good question here. Mike, how are you?
Good. Can we look at Berkshire Hathaway, please?
Okay, very important stock to look at. And one of the reasons being Berkshire Hathaway, the owner is Warren Buffett. Warren Buffett is probably one of the all-time historical greats in the stock market. But I don't really think so much the stock market, even though that's a fact. I think in the business world. And one of the reasons is he buys businesses. They are reflected by the stocks in the portfolio of Berkshire Hathaway. I'm looking at the B stock right now. But it's the businesses that have to run. It isn't an icon who's just buying a stock, a piece of paper, and maneuvering it. This guy is running businesses. I have the utmost respect for Warren Buffett's business acumen. There are things that over the years that have been done by Warren Buffett that I think he's got away with a lot with his little smile and his knowing everybody. But in fact, that whole business with was that the CEO? I don't remember who it was. It was one of his top echelon, partners in Berkshire Hathaway who advised him on stocks that he might consider buying when in fact he owned them himself. That is this particular person. And that whole thing, it was never, the SEC just said, oh, Warren Buffett, why worry? He'd never do anything like that. No, that was very wrong. All right, I got that out of the way. So Berkshire Hathaway, fantastic stock, owned by a person with an incredible eye for picking successful businesses, Warren Buffett. Now, this is very interesting. The monthly chart went to 119.30 in high in July, and then went to 119.30 and then 119.38, 8 cents higher in August. That took it to G/C in the weekly, and I'll talk about that Rogue Wave Peak F in a moment. I'll be right back with Mike in Long Island, and we're looking at Berkshire Hathaway, probably an important stock to look at right now.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Dow is trying to come back. It's at 179, down 179. S&P's down 20. Now we've got that relationship that I always talk about. The Dow is down 1.17%. S&P's down 1.20%. Actually, it's still a little tight. I like the S&P to be a slightly bigger percentage, but in fact, they're doing the job, and they're pulling back. A little oversold very short term. We'll see what happens over the day. Now, we're going back. We've got Mike on the line. We're looking at Berkshire Hathaway. Oh, he's looking at I'm looking at the B stock. Just the one quick thing. Richard called that he couldn't hold it. It was my fault. I should have known that he needed to be seen quickly, as we say, doctors. But in fact, USD CAD, I just want to say, I see it down. It's in a peak F top in the weekly chart. The 1.026 is the USD CAD pair, and I'd be very careful. I think it's going to be pulling back. It's just made a little bounce in the daily. It's stuck in a range, but my eye says it's going to be pulling back. It's going to have limited upside, and that's how I just wanted to get that out. Now, Mike, let's go to this. So the Berkshire Hathaway, I got that out the way with Warren Buffett, as far as being one of the absolute all-time great identifiers of stock that over a longer period of time have worked out fantastically. This is definitely the man. So absolutely bravo, kudos. He doesn't need it from me, one of the world's richest men. But I do want to give it credit where credit is due. Now the other thing is this: in the daily chart, it made a Chapman Wave Cup there's what I call the drop bucket pattern, 119.30 at peak E. It goes back up, comes to a peak F top at 119.38, pulls back over a third to a half of the cup formation. That says you can retest the cup low, and if you take that out, be careful, because you could in fact get a 1-to-1 to the downside. That's the equivalent of what we had in my opening call when we got a stock that did a 1-to-1 to the upside, which we still own, which is even today with this market down sharply is up 2% after a fantastic gain yesterday. So that 1-to-1 relationship is something I do respect. So I'm anticipating on a short-term basis that Berkshire Hathaway will at least fill the 113.21 to 112.71 gap between the 3rd and 4th of July. That's number one. So the resistance is 116.67. Now, being Warren Buffett, we have to look at this as if it's a long-term position. What are we looking at? For the way that it's walked, this looks like a little caterpillar walking up a twig. When it moves up, from the moment it broke out on the 14th, the week of the 14th of December of 2012 at 90.04, it just continued. It walked the 9-period moving average. This is the most, where's my book? This is the most perfect example of walking the 9, let me put that down, walking 9 EMA, BRK, .B, that's the B shares I'm looking at, and the weekly, and that's an entire period of late 2012, so that's 2012, 2013. Okay, I just didn't want to lose that, because I do that all the time. I find these fantastic examples for when I teach my courses, and and then I have to hunt for them again. Now, there's a chance that this week it's the first time it's going to close underneath the 9-period moving average. The MACD is very weak. The stochastic is quite good at 83%. The monthly chart is spectacular, but it is leg D, and it made by a few cents a new, is that an all-time high? Yes, a new all-time high. Peak D was the last high at 101.18 back in December of 2007. Plunges down to 45, was it? 44.82 in March of 2009. Goes to peak E, pulls back from 87.86 to 65.36. The quick assessment is to say there's nothing wrong with the monthly chart. The weekly chart is a cautionary sign, and that says that long-legged doji, this doji here, of the week of the 21st of June with a high of 115.66 to low of 110.86, that is the candle that I think that Berkshire Hathaway is headed to over a period of a couple of weeks, not a couple, over a period of weeks, okay? Now, let's just put this together and say, well, let's just imagine, I'm not going to ask you the question, I'm going to do this from two sides. If one was long, and you've been long for quite some time, my recommendation, I see absolutely nothing wrong. I see both in money management, in the chart formation, in the monthly, in the weekly, the daily, I see absolutely nothing wrong in taking something off right now, as it stands at 115.09. That money could be rededicated maybe 3 points lower. I'd have patience to rededicate that money back to Berkshire Hathaway. And, there's a break coming up right now. So, Mike, what I'm going to do is in the break, I'm just going to give my thoughts to wrap it up, because I think it's part of a market tell right now. That's why I'm so pleased you brought it up. So I'll be back, and we'll put it together with the market. Mike on hold, and I'll be back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
A couple of quick questions about some of the home builders. I will try to get the home builders. I don't know if I'll do it this section, but the next one. But I will do the whole home builders because they are very important. Okay, so, Mike, this is what I'm thinking. That something must be taken off right here. I just see no reason why it shouldn't be, because even if the market, even if it went higher, you're talking from 115 to maybe leg D if there's going to be an alternate wave count. I don't think so. Just above 119.38, so it's 3-4 points. But the downside says it might be 3-4 points, but it could also be time. And I would prefer to see someone have that money in hand, ready to do whatever needs to be done, than to be waiting for a higher high, which I don't think is going to come. So now I'm going to ask you, is this something you're looking at, you're wanting to do something with? What about it?
My question specifically is, do you expect a leg E in the monthly, and why would you, if you do, why would you expect a leg E? Yeah. Okay,
the answer is twofold. One is that the MACD, the moving average convergence divergence, is still very strong. For it, that green line, for it to close below the red line would take, I would say, all the way down to the 9-period exponential moving average at 106.88, maybe not quite that, maybe to 110, 109, yeah, maybe somewhere over there. And then it could even start the M pattern. You know how these patterns, you saw this earlier on, back in 2007 to the high of 2008, there was that M pattern. Back in July, August of 2011 to the high of early, a year later. So of 2010 to 2011, going to D to E, you saw that same thing. You saw a little curve. So that to me is a tremendous sign of strength. The stochastic's at 92%. For it to start to fall, the price would have to pull back probably. For it to close under 80% is almost the same thing, but it would happen a lot quicker. So it could go to 78%, say. That's 78%. That's 16 points lower, but it would take the Berkshire Hathaway on a point basis, I would say pretty much 5 to 6 points before it did that. Maybe 4 to 5 points. So I like it longer term. Put it this way. At this particular point, I have no reason. I haven't yet got a peak D. So it'll take the whole of September to go under, to not break above 113.38 before I get a confirmation. So I like it. So
all right.
Hope that helps you.
Yep. Thank you very much. Yep. Thank you.
Great. Let's go to Lou in Nashua. Hi, Lou. How are you? Lou, you there?
Could you look at the ES Mini and see if we're going to get a bounce today?
Okay, bounce today. Let's see. We'll go to 120-minute chart, ESU. We've already started a bounce. It's coming from a trend line. Folks, the E-minis are down 17.75 at 1664. There's a trend line that goes all the way back to the peak F top. That was an alternate count, F/C. That was back at 17, or was it 16? It was 1703.75 on the 1st of August. The very next day, the 2nd of August, it went to 1705, round number high, the alternate count peak D, which became the top, as all the technicals were fading. Yes, I think there could be a bounce, but I must just do this real quickly for you. Let me go to, I'd like to go to the 15-minute. There we go. The 15-minute chart. ESU, there we go. The 15-minute chart says there could be a bounce, but so far the pressure, the selling pressure, based on this particular moving average, for folks who are looking at this one right here, is saying that the selling pressure is still there, and until the E-minis can get to 16, there is 1664.0. Until they can get to 1667 and hold for about an hour and a half, I will not get a positive cross in the 15-minute to say that it can be sustained. The MACD is right on the cusp of turning up, and that allows for a little bit further upside pressure. The stochastic. Now, are you looking at this as a trade? Are you in the trade for a quick push to the upside, or you're looking to reshort or to short, or what?
I'm looking to go.
So you're looking for a bounce, and you're looking actually for a substantial price bounce. Is that correct?
Correct.
Okay. If you are looking for a substantial bounce, the 200-period moving average in the 1-minute chart is just now bumping into resistance. I'm going to make the suggestion: the trend is your friend. And the trend says, even if there's a counter-trend rally to the upside, and we've been down a lot, and there should be some kind of counter-trend bounce, you've got to have really nimble fingers. So if you're going to play a bounce, the only thing I would recommend, wait for, in the 15-minute chart, I don't know which time frames you look at, but in the 10 or the 15 it'll be the same. Wait for a pullback to about 1662.50, 1662.25. If that holds for 2 bars and doesn't break down, you can grab a long position and have a trading stop. The moment that long position gets to, and I'll give you a number right now, if it goes to 1669.75, tighten up the stop or take something off of one of your positions if you've got a couple of positions. The moment you get to 1:20 in the afternoon, between 1:20 and 1:20 and 1:47, about 10, 12 minutes before 2 o'clock, if there are signs that that any kind of rally is starting to falter, be careful because there could be another last hour smash to the downside. Now, the other way around would be if the volatility index, VIX.X, oh, it's pulled back. It's so quick to pull back. It is amazing how the volatility index will not hold. A, B, C, D. A, B, C. Hasn't made a D. Okay. Do you watch the volatility index as well?
Yes.
Okay, great. If you're watching the volatility index, get out of your position if the VIX goes above 1453. Right now it's at 1406. But in the meantime, I can see some kind of a relief. It's called a relief rally. But I'd play it with very quick fingers. I'd rather, even though we're down pretty sharply today, and we were down 113 on the Dow, down I think it was 6 something on the S&P. It was a big divergence yesterday. S&P is today catching up. So I would be looking at a a long trade as a counter trend trade. I'm not sure I would hold it overnight, but
No, I wouldn't do that.
okay, so this is what I'm going to recommend. If the E-minis come down a little bit, to buy it right now, you got too much of a risk and less reward. Wait for a pullback anywhere around the 1662, maybe 1661 area. If that holds, and then all of a sudden you see it starts to make a new peak, a new leg up in the 10 or the 15-minute chart, as soon as it starts to build some support, you can grab it. I would not have more than, I don't know what kind of stops you have. I would have a tight 2-point stop, maybe 3-point maximum. So I let it run. Your target on this particular one would be that little doji candle of the 15th at 1671 to 1673. That's a lot of points, but that's only if the volatility index keeps pulling back. So good luck.
Thank you.
Thank you. And I understand. I know that you like to trade these counter trend positions, and you do it very well. That's why I was prepared to go through it with you. Now, the most important thing is that line is 1670 to 1650. That is going to be tremendous resistance. 1673 is next. That's the 9-period moving average on the 120-minute chart. Okay, so this is going to probably be archived. It's all historical. It doesn't mean a thing. Well, let's go back to our charts that I wanted to look at. And I'm going to just... there you are. Went right back into my engineer. Thank you, Steve. Now, what I'm looking at, let's go back to all the different things. The QQQ Trust Series. One of the reasons why I was looking and waiting for the Qs to make a leg D from that leg C that it made on the 5th of August at 77.08 was because it was a pattern that I call the falling axis. It's the declining, expanding cone formation. And that formation, I just got to finish this thought. Lou, if the volatility index starts to climb, you've got to switch your position and go back to short, or go to short. I just wanted to add that. So now what we're looking at is in the VIX, in the QQQ series, which is trading at 75.77 down 1.04, after hitting the 32 period moving average, that dashed line, exactly, and then bouncing, that peak D at 77.27 is something that I watched real closely as it was occurring. Why? Because we anticipated that you had to get a leg D, and Apple, oh, thank you, Terry, yes. That leg D was sponsored by Carl Icahn because he pushed Apple up. Now, I had a question about whether to buy Apple puts and all that. I'm going to hold off on that. Maybe in the next hour I'll get to that. Those are the details I don't want to get to. That would be for tomorrow's expiration. Let's just do one thing at a time. That peak D in the Qs came about with a very strong MACD and stochastic at that peak C at 77.08. They were starting to weaken a lot in the last move up that was sponsored by Icahn. So that peak D had a fractionally lower high yesterday of 77.18. Now I'm going to type that in. Why? Because I developed a technique over the last 2 years where I call it a 2-bar reversal. Now that 2-bar reversal, and I got to give Gringo kudos. It was Gringo yesterday that was talking about recounting the NUGT and the GDX 120-minute charts. That was a PD. That was Gringo and the Dan that gave it. Congratulations. So now what we're looking at is underneath the 9-period exponential moving average, I should be able to go to a down arrow. I'm very strict about this rule, even though you will notice in my charts that I can have a down arrow, and a couple of bars later there's a new, there are no, well, let me put it this way. When you get the down arrow, based on my technique of the below the 9-period moving average, the MACD crossing negative, the stochastic under 80%, and price movement to the downside, you can still get that rogue wave, that isolated, I'm always raising my hand, right arm extension to the upside on weak technicals. And that's what you got to watch for, because then if you get a sell signal, I put the inverted V shape, that little hat, the little carrot on top. So that's what it stands for. Nobody ever asked me about that except in my Master Trader series. But that's really important. So I can't put a down arrow on the Qs just yet because the stochastic has not gone under 80%. And if it does that, I put my down arrow, even if there's a right arm extension or it recycles to a new buy signal. Hey, I'm not the stock. I'm just doing the best I can. So that would be a recycle, and we'd adapt to whatever it is. So unless 77.28 is hit, right now, it looks to me like we're going to be pulling back in the Qs, but there's still some internal strength in the Qs, but it's the weekly chart. They went above the major uptrend resistance line. So we'll talk about that now and in the next hour when I do Larry's show, and that'll probably be archived for next week, because these are the bigger pictures that I want to give over these 2 days. Let's go to Rich in Orlando. Hi, Rich. How are you?
Doing well, Basil. And yourself?
Very well, thank you.
Good, good. Well, Basil, I'm in ERY, and I'm kind of on the back. I'm in at 30, and it's sunk underneath me. And I'm trying to figure out here, is this kind of the beginning of some kind of a decent drop in the market, or is this just another pause before we move further?
So this is the Energy Bear 3x shares, right? I've actually never had my subscribers in this. I always just overlook it because that XLE, which is the energy sector. Let me just go straight. A, B. This is leg C up in the daily chart of ERY. Let me just say it again. It's the ARCA, ARCX Energy Bear 3x share. So it trades at 300%. But if you look at the XLE, and this is really interesting, the XLE has been in a trading band. I spent a lot of time on this chart over the weekend because I always notated, but I never really do anything about it. But in the monthly chart, it went to, what was that? I should put the date. In May of 2008. So let me put that down. 52008. It made a peak F top at 91.42. And that was after a series of buy signals and sell signals, very short-term sell signals. There was an instant restart back in July of 2004, and then another one, actually almost another one in July of 2006, and then went to peak F and it plunged down to the 200-period moving average. Then it went up to a D, and now it's gone to an E. So it's really worth talking about the energy, and I will come back with Rich in Orlando straight after this. We're looking at ERY. I'm looking at the XLE. We'll be right back. Dow's down 170.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
We're on with Rich in Orlando. We're looking at the XLE, which is the S&P Select Energy Spider Fund. Now, this is really interesting. It's held at the top of the trading range, which is 84 is the kind of area that it's been in for the past 6 or 8 months in the daily chart, and the low mostly has been towards the 80 area, and it's right now at 81.80. So now you are in a short position, and
Correct.
It's under the 9-period exponential moving average.
Correct.
And I think you are right. I think you're in the correct position. I've had a terrible time with the weekly chart. That's why I spent time with it this week. I went over it and over and over it. And no matter how I count it, I get a peak F top on the week of the 15th of March at 80.14. It pulls back sharply, and then it breaks to a new high. And I have no choice but to call it peak A and peak B because there's no H. I can't call it G and H because there is no H in the Chapman wave. So this is one of those rare instances because it's underneath a previous major high that it might fail at peak B in the weekly chart. But you know what? The stochastic's at 88%. The MACD is turning down, but it hasn't really crossed down. And the monthly chart is in leg. It's actually peak E, 83.90. There's that 2-bar reversal, 83.96 to 83.85. Wow, 11 cents. I think you're in the right position, but you're in the ERY, which is 300%, so that makes the little changes big. Here's what I'm going to suggest. Everything about it says that there could be a peak C if the high of 27.86 of today becomes the peak. then it should hold either at or just underneath 27.20 to 27.11, and then it should make leg D. When it makes leg D, that's going to make the weekly chart in leg B, and that's going to be really important, because what it'll say is that if the XLE starts to take out, and this is what you want to see, it's a nice session today, but the technicals aren't supporting it right now. What you really want to see is the XLE take out, and I'm sure that you look at them both at the same time, the XLE must take out 80.82. The moment it takes that out, then the gap at 80.30 to 79.99 will become the target. At this particular point, I think you're in the right position. Now, what would make me real nervous? If this thing closed for 2 out of 3 sessions above 82.35, I say, you know what?
You're talking about the XLE now.
The XLE. If it closes above that, I'd say to you, you know what? It's really just going sideways, and at 300%, that can drain your profit quickly. So I'm going to suggest some part of your position should have a stop based on the XLE. If it gets to 82.09, I'd start to lighten up. You can always get back into the trade. I'd lighten up. I hope that helps you.
Thank you very much, Basil. I appreciate it.
My pleasure. Thank you so much for calling. Thank you. So, folks, I'm going to be back for Larry's show. I'm continuing this discussion on the bigger picture. And the bigger picture to me, I'm not giving you way downside targets. I'm doing nothing. I'm going step by step until the Qs give me a signal to say that they're joining the downside party significantly, and that's the Qs are at 75.83. I want to see them take out, preferably by tomorrow, I don't think they can do it, take out 74.86, the weekly 9-period moving average, to at least suggest to me that that is a peak F-top that we've got, because all of next week there will not be a higher high. Now, I haven't discussed gold or anything like that. I will do that in the next hour when I do Larry's, and there again, I'm going to try to give a bigger picture, because my suggestion at this particular point is that the stocks are looking great, a little bit overbought, but I think this is going to become an arch formation with the retest of the lows of 114.68 in the GLD. Very interesting. So, Basil Chapman, Tiger Conditions Hour. I'm going to sign off now, and I'll be back right after this for Larry's show, and I will continue my bigger picture. And that might be archived next week. So, I'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.